what we're going to do, guys and gals, is I want you to, when you first log in, let's make sure we look at that magenta moving average. That's your dominant moving average. So your dominant moving average is going to let you know whether you're in a downtrend or an uptrend. If it's in a 35 to 45 degree angle, then what I want you to do is I want you to look to short only. If the smaller moving average is in the direction of the magenta, then you know that we have moving average to the downside. I mean, downside bias. All you're going to do then is look at this bottom left chart. That's going to show you where possible resting sell orders are and possible stop orders are just above HVA to repel price. So we're going to look to trade off these red dots and downtrends and trade off these red dots over here and downtrends on the trend chart. So when we move up, we moved up to the first level over here. We moved up to the first level. We have a few criteria that we need to do on the 89 tick to enter the trade. What we're going to do is we're going to look for a pull-in bar, and we're going to look for divergence down below as we approach the first level. So as we approach the first level over here in the bottom left chart off the HVA, as we approach the first level, we never had any pull-in bar right here on the 89 tick. And we never had any divergence, none. So there's no divergence, meaning there was no supply at that level, so we can't take that first stop at HVA. So what we're going to do is the next HVA projected way ahead of time at 93. So right when we get to 93, as we come up to 93, I'm looking at the bottom left chart first of all. As we come up to 93, we know our next projected on the volume chart down here, our next projected sell is right here at 93. So I'm all the way down here at 88.5. I know my next projected volume sells at 93. So as I come into 93, I know already I'm 50 ticks away. I got plenty of time to wait for it. As I move up, I want to look, see if I get big, giant, long bars. Big bars are here. Big, long bars. I want to see where my arrow's at. Big, long bars are going to tell me that the buyers are getting trapped. The buyer's getting trapped in a downtrend. I should see a big reversal that's going to be impending in a few minutes. So what I'm going to do is I'm going to look for big bars. As I'm looking for big bars that come in my 93 number at the bottom left chart where my volume, resting volume is, it's going to let me know if I got a possible reversal. As I see the big bars, I know that buyers are possibly getting trapped. I want to look straight down, look right to left. Do I have divergence? Yes. You want to see a lower high that tells you that there's more supply. For all you guys and gals that know how to trade order flow, supply rules the market. Supply is in control of gold and also crude. The more supply you have, you will go down. The less supply you have, you will go up. So what you want to do is at this highs, you have less supply. You have big bars where the buyers are getting trapped. Okay, once the buyers are trapped, you're going to look for a reversal bar, a spinning top doji or hammer. There's your spinning top. There's your reversal bar to the exact bar. And it calls the high. And it does this every single day off of these patterns. So what you have to do is just watch for these patterns to qualify the trade. Now, this one down here was the number one trade. The moving average now crossed up. So the LVA was down here at 1385.77. And what John was talking about is a number one buy. And I said, yes, because moving average crossed up. May not be a big one because the dominant magenta has been down all morning, but it still qualifies as a number one. So we knew our short target was all the way down here anyway. We had the magenta as a first maybe possible target at 87, but the major support was right at 84.85. So we knew once we get down here at 85.77, mark it up again. There's your 85.77. How do you get in the trade? Look for big, giant, long bars again where the sellers now are going to get trapped, just the opposite. And it's the same old strategy. Sellers get trapped. There's your big bar, long bar, long bar. Imagine that. Same exact setup, only the opposite side on gold that just happened. Do we have less supply? Yes. Look at the supply right there. There's your supply. And there's the market moving up. So it's the same exact thing that happened on the short side. You had big bars coming in to the buy, big giant bars showing the seller's going to get trapped. And then there's your spinning top. We had big bars coming into the HVA. And there's your spinning top. The buyers get trapped. Exact same setup, only opposite sides. It's the same exact setup. Okay? So it's the same one over and over again that we do. So, you know, if you look at that for you gold traders, I want you to really look at that and be aware of that. If you're trading gold, the big bar technique really works really well. And some of you guys and gals are really implementing that great because, you know, it lets you know if the possible sellers or buyers are getting trapped.